Welcome everyone to Vested Interest. This is Shane back for our daily stock pick of the day video. Today is Monday, the 16th of December. We're going to take a look at Johnson & Johnson out of the healthcare sector. And before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday whenever the market is open, and we do what we're going to do on this video. We run through my initial screener. We see if it meets the criteria to make it onto my watch list, see if it's presenting any potential value. So if you like those type of videos, go ahead and subscribe, hit that thumbs up button, hit that notification bell, drop a comment down below. Let me know what you think of the video. Let me know what you think of Johnson & Johnson. Is it in your portfolio? Are you looking to buy, or are you one of the people who is driving the price down right now and selling out? And for those of you who are able, there is the thanks button down below. If you want to buy me a cup of coffee, go ahead and click on there. It's a way to help out the channel as well. A special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now this is how we are going to run through the video here. This is the vested interest stock screener. We're going to run through this criteria, see how it matches up at the end. It must meet 5 of 8 to make it onto my watch list. If it was in the financial sector, like a bank or an insurance company, I add price to book. You can, and then it must meet 6 of 9. You can use price to book for any company just outside of the financial sector. Don't use one as fair value. That is really for banks and financial companies in particular. Other companies use price to book on. Make sure you are looking at companies in the similar space in the same sector, and then compare 2, 3, 4 of those companies, similar companies like Coca-Cola. You compare to something like Pepsi and Dr. Pepper, right? Those would be 3 companies that do similar things outside of the financial sector. And you could look at their price to books and you could see how they match up against each other. Obviously, you're looking for the lowest price to book as possible whenever you're looking at companies' price to book. That's how you use that. You can also look at a company's price to book historically over the last year, 2, 3, and see where it's at currently compared to where it's been in the past. Now let's get back to Johnson & Johnson. Check them out on their homepage, www.jnj.com. That's www.jnj.com. That is their homepage where I pulled this information from. Our company, every day, our more than 130,000 employees globally are building a world where complex diseases are prevented and cured, treatments are smarter and less invasive, and solutions are personal. That really doesn't tell us a whole lot of what they do. They're a pharmaceutical company. They've recently had a spinoff where they took their consumer staple segment that you maybe were aware of in the past, stuff like their baby powder, their diapers, some of the other stuff that they sell. Well, I don't know if they sell diapers. I know they do baby powder and some other products there that would be more in the consumer staple sector that was spun off into Kenvue. So maybe some of you are buying that or got that company whenever they did the spinoff there. Now they are just a healthcare company, like I said, a pharmaceutical company primarily. And you can look here, going back through their history was kind of interesting. You can see Edward Mead Johnson, right, part of the Johnson & Johnson duo there, a couple of brothers, a businessman with a penchant for helping others. The brother of Johnson & Johnson, co-founders Robert Wood Johnson and James Wood Johnson. Edward Mead Johnson led the company's sales and marketing division in the 19th century, and they did start way back in the 1800s. Edward Mead left Johnson & Johnson, taking with him the company's digestive products line, a business that would eventually become a leading global company in the field of infant and child nutrition. So there you can see how it kind of became a couple different types of company, right? They're food products for infants. That's part of what was spun off there as well. And then you can see here, this gentleman is really kind of important throughout the history for companies like this. The legacy of Dr. Paul Janssen, how a funny idea helped change the course of modern medicine when the Belgian physician created his research lab in the 1950s. And that is actually about when Johnson & Johnson reached out and brought him onto the Johnson & Johnson team. That's why he's part of this history here. In the 1950s, he did it largely on his own, but it didn't take long for the medical companies to realize that then 26-year-old was onto something profound. Over the course of his long and esteemed career, Dr. Paul, as he was known, coined more than 100 patents and developed dozens of life-changing medications. So that's probably where Johnson & Johnson got a lot of their ideas, especially for the 50s, 60s, and I believe into the 70s whenever he was working. You'd have to go back and look exactly when that was. But again, a couple brothers started it out. expanded on. The other brother went off and did his own thing and kind of expanded out into some more. And then they brought this gentleman on to really build out the pharmaceutical portion of it, which is kind of their bread and butter in the healthcare sector currently. Now, the reason we are taking a look at them, down 1.77% on the day, we are talking about Johnson & Johnson, ticker J&J, down to $143.85 is where they ended out the day. 52-week range as low as $143.13, as high as $168.85. So they are right up against their 52-week low here. Again, wasn't long ago, I think earlier this year or late last year, where they were in a similar situation and I was adding them to them. I may be adding to them again here while they are at their 52-week low or under my cost basis, which they currently are. Market cap of $346.745 billion, a beta of 0.52, so less volatile than the overall market. Price to earnings PE ratio seems a little elevated at $23.77 per share. Maybe that's why they're dropping a little bit, to see if we can get that down. EPS, earnings per share, is sitting at $6.06 per share. Their earnings date is coming January 22nd. Usually they give a range, but they're giving you a specific day, so tune back in here next month if you're interested in that. Forward dividend is $4.96 paid out in the year. They are quarterly payers, so divide by 4, though we will see that here towards the end. Nice starting dividend yield, especially with this pullback back over 3% at 3.38%. Ex-dividend date was November 26th. They are going to pay out on December 10th, or did pay out on December 10th. So you would be in line for the next dividend, but you're going to have to wait a little bit here, a few months, until their next payout. Dropping down to their 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, they see some upside up to $174.28 per share. I think that's a little over 20% upside right there. Now, jumping over to the right, I'd like to look at dividend yield theory to see if the company is potentially presenting any undervaluation. To do that, we look at their 5-year dividend yield average, 2.72%. We compare it to their current 3.38%, or over here where it says forward, 3.38%, same number. And since their current yield is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory, potentially undervalued. Payout ratio, I like under 75%. They're actually a little elevated right now at 80.33%. So we want to keep an eye on that, just like LyondellBasell that we did last week, a little over what I'm comfortable with. Though sometimes that happens. Companies hit above for a while and then they'll drop back down. So we want to watch this, because this does start to get a little dicey, whether or not they can maintain that dividend, and definitely whether or not they can maintain the dividend raises, which Johnson & Johnson has been doing for a long time. Dropping down to free cash flow, I like growing free cash flow over time, because typically if a company has growing free cash flow, they can raise their dividend, they continue to buy back shares, they can pay down debt, they can make acquisitions, they can reinvest back into the company. A lot of things that companies do with free cash flow. We want them to be raising the dividend and buying back shares if possible. So you can see here, December 2021, $19.7 billion in free cash flow. December 2022, down to 17.1. December 2023, up to 17.7. Trailing 12 months, back to 19 billion here. And then also, but remember, we're not quite due December, so some of these numbers will include or don't include the full 2024 years yet. So we'll have to wait to see what they shake out at, but it looks like over 19 billion again. They are repurchasing shares as well. You can see here, December 2021, 3.4 billion in repurchase shares. They jumped that up in 2022. So though it looks like a decrease in free cash flow, they significantly increased their repurchase of shares. So that can offset that. 2023 looks like increase in free cash flow, but a slight decrease in repurchase of shares. So it looks like maybe a flat year there. And trailing 12 months back up to 19 billion, but significant decrease in repurchase of shares. I don't think that accounts for the increase in free cash flow. I'm not going to give them growing free cash flow. It looks like they might actually be, compared to where they are in the trailing 12 months, down from where they were in 2021. So I'm going to count this year as a down year, at least comparative to 2021. Maybe these years they were growing or flat. But looks like they might be slightly down. Again, wait to see what the rest of the year shakes out. But for right now, I am not going to give them growing free cash flow. Now, jumping over to stockanalysis.com, another source I go to for information. And I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. It's just a back check, right? You don't want to just blindly trust one source. They could be wrong. They could be outdated. It happens sometimes. They do have 14 analysts that have taken a look at this. They call it a consensus buy. Low estimate of $150. It currently sits lower than their lowest estimate, and that would represent a 4.28% increase from where it currently sits. Average estimate of $173.93. That's pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 20.91% increase. High estimate of $215 would represent a 49.46% increase. All the while, you could collect that 3+% dividend yield, 3.2, 3.3% dividend yield, depending on when you buy them. I like to look at statistics and look at return on equity and return on invested capital to see how well the company is reinvesting back into itself. To do that, we're going to look at ROE, return on equity. I like 10% or better. They're sitting at 20.89, so 20.89%, so above the 10% I'm looking for there. Return on invested capital, same thing at 13.97%. They're above the 10% I'm looking for there. EPS growth, I like 5% or better projected over the next 5 years. They're actually projecting negative 0.72%. Don't like to see that, but that's just the way it is. And revenue growth is forecasted at 3.83%. Really wondering why their EPS forecast is negative if their revenue forecast is positive. They're expecting some downturn in their earnings, apparently. So I am, if I didn't mention it already, I am long Johnson & Johnson. I do have a position. I currently hold 122.12087 shares. I am down 3.10%. My cost basis is $148.45. Again, so as long as it's under my cost basis, I'm going to probably nibble on this position. I'm not looking to add a significant amount because it is the largest position in my portfolio currently. Not that I mind that, but that is where it sits. So I may nibble a little bit while this is under my cost basis to bring down my overall cost per share here, bring up my potential future returns and my dividend yield. Quarterly payer, as we talked about early, payout ratio 82.09%, so a little elevated. We want to keep an eye on that. Dividend growth of 4.47%, so nice single digits there. Growth of years, 62 years they've been growing this dividend. So, even though their payout ratio is elevated, I anticipate they're going to continue that growth. We'd like to see a little bit lower payout ratio and a little better growth overall. But their buyback yield is positive at 7.1%, so they're doing that at opportune times. Shareholder yield is positive at 10.52%. You want those numbers to be positive. That looks good overall. They do pay out on the March, June, September, December timeframe, like most companies do. Going back in time here, you can see May 2022, that would have been their raise as well, up to $1.13. May 2023, they raised it up to $1.19. And most recent, May 2024, they raised it up to $1.24. And I would anticipate if they're going to continue this dividend growth, whatever it is, whether it's a 4.47% again or lower, which might be lower with such a high payout ratio, they will do it in May 2025. And back to the screener we go. So here's the screener. Understand the business. That's where we started. Check there. Growing free cash flow. I'm going to actually say no, flat or possibly even down this year. So no there. Growing dividend. Check there. Growing dividend. Dividend payout ratio is not under 75%. It's actually above 80. So we want to keep an eye on that. Check valuation based on dividend yield theory. Dividend yield theory says it's potentially undervalued. It is right up against their 52-week low, so a check there. Return on invested capital, return on equity, both over 10%, so a check there. Earnings per share growth was actually in the negative. I didn't like that, but no check there. So we're looking, and it's not a financial company, so we're not looking at price to book. 1, 2, 3, 4, 5. It continues to be in my portfolio. It is one that I am looking to add to while it's under my cost basis, so I'm not as worried about it. And even if it wasn't in my portfolio, it would make it onto my watch list. Let me know what you think of Johnson & Johnson in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Click that subscribe button down below. Drop a comment down below. Let me know what you think of the video. What do you think of Johnson & Johnson? Are you buying? Are you selling? Are you holding? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have a company like Johnson & Johnson you'd like me to cover in the Stock Pick of the Day series, drop in the comment section. I'll try to work it in the rotation on the day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Thanks for stopping by. Thanks for watching the channel, and we will see you in the next time. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey of educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel as a certified financial advisor.